What is up, everybody? Welcome back to, bro. What part even is this? It's part like 24 of the Forever model. In a different landscape. I'm in a hotel right now because of what they were doing to my home. But yeah, we're probably gonna be here for a couple of days. But yeah, let's get right into it. This video, obviously, by the title, is going to be on market structure. I hope it's a lot quieter than my last video that I posted, the trade recap that I posted. Because I rewatched it and it sounded like I was inside of a vacuum. So hopefully this is a lot better and we can actually hear ourselves. Okay, so let's do this. Okay, so market structure, right? This is something that a lot of you guys do not even think about whenever you guys are trying to take a trade, or you guys are looking at the market and you guys are trying to figure out, hey, I want to take a trade towards this, this, and this. These are my confluences. This is why I feel like this trade will hit. This is why I don't feel like this trade will hit. Right? You guys are not fully thinking about every single, bro, what is on my lip? Every single possible option whenever you are discussing and analyzing the market, right? So market structure is very important whenever you are trying to align your confluences, right? So if I have two fair value gaps and we are bullish and we react out of my first fair value gap and we push up and we have another fair value gap and we react out of it, perfect. Most likely I'm making higher highs and higher lows. If I'm holding my confluences, I should be making higher highs and higher lows, right? If I am bullish, that is going to completely respect my conditions and continue the market trend, right? So if I'm bullish, we should be making higher highs and higher lows. If I'm bearish, we should be making lower highs and lower lows. So that is, kind of like the basics of the market structure. The second part of it is, we're going to be talking about that in a second, but let's do this thing that we always do where we go like, okay, where we go like this. So when looking and analyzing the market, we should be making higher highs and higher lows, and lows if bullish, and if bearish, we should be making, I gotta scoot this over a little bit, we be making lower highs and lower lows, right? So this doesn't have to be consistent, like over and over and over and over and over again, right? Like we're not, obviously, if we're on the 1 minute time frame, if we're on the lower time frames, we're not always going to be getting the higher highs and higher lows, right? Like if you're on the 1 minute time frame and you are trying to take a trade, towards the market, we're not always going to be getting those higher highs and higher lows, because we are in the lower time frame. It's going to be a little bit inconsistent. Now, if you do pair that with logic, right? So if I'm telling you guys, okay, that's a little bit inconsistent on the lower time frames, what do you think that means whenever we are getting that on the lower time frames? If we're getting higher highs and higher lows in the 1 minute, what do you think that means? Most likely, price is strong and trending and respecting the market conditions during that time frame, right? If we are making higher highs and higher lows in the 1 minute consistently over and over and over again, okay, that's really good. We are holding market structure. Okay, perfect. Right? But ideally, whenever we're looking at the higher highs and higher lows, the lower highs and lower lows, we're going to be seeing that on the 5 and the 15 and the hourly and the 4 hour and the daily, right? If we're trending upwards on the daily, we should be trending, it should be pretty clear where we're going. It really, market structure is really a thing to look at and identify on the higher time frames, right? Because higher time frame is where we deliver. So I'm going to be getting into that right now. We're going to start with that right here, actually. Higher time frames is where we deliver, right? This is where we're going to be looking at price, and we're going to be saying, okay, right, we are right here and we are delivering higher highs and higher lows on the 1 hour time frame. Okay, perfect. 1 hour time frame is delivering higher highs and higher lows. I should expect to continue that trend. Why? Because overall, in the higher time frames, the market is continuously carrying us to those draws in liquidity, right? Because that is obviously our targets. If we have these draws in liquidity and on the higher time frame we have a good market structure and we have a good, it's like a trend, I guess. If we have a good trend, typically we're going to deliver unless we brutally edge, right? So that is what we're going to be looking at mostly to identify the market structure. So higher time frame is where we deliver. So we should look to identify market structure on those time frames. All right, so if we are delivering, we should look to identify market structure on those time frames, right? Like I said, it's going to be a little bit inconsistent on the 1 minute time frame. If you are making higher highs and higher lows on the hourly, and then you scale down to the 1 minute and you are, you're making a higher high and higher low, and then all of a sudden you have a lower low, okay, and then you have a lower high, is your market, structure completely broken? No, it's not. You have to look at overall, what are we doing, okay? Maybe the market structure on the 1 minute is kind of getting you confused. Okay, scale up a little bit. Go to the 5 minute. Is the 5 minute telling you the truth? Okay, how is the 5 minute looking? If the 1 hour is telling you that we were making higher highs and higher lows, and we go to the 5 minute and it's not accurate, maybe we don't want, maybe we were not. Right? Maybe that's where market structure is about to shift. Okay, so market structure is really typically going to be identified on the higher time frame. That's why every single morning when I signal you guys in the Discord, I say, hey, look for this, this, and this. Why? Because I look at the hourly time frame and I look at, okay, this is what the market was doing earlier, this is what the market is doing now, this is how I'm going to use it. Perfect. Easy. Super, super simple. Super, super easy, literally. So, when we deliver, and whenever we're looking for direction and structure, we are going to be looking at the higher time frames. Okay, I'm gonna ask you a question right now. This is like for you, for the watcher. Let's see if you were listening. If you were making higher highs and higher lows on the 1 minute, and your overall market structure is bullish on the hourly and the 4 hour, if you are all of a sudden making lower highs and lower lows on the 1 minute, is your structure broken? No, it's not broken. It's consistent with the higher time frames. Higher time frame is king, always. Right? So if I am looking at something on the 1 hour versus something on the 5 minute, obviously the 1 hour is going to be telling me more of the true overall story of the day. Nothing is broken until you can see a high time frame shift. Right? So what I mean by that is, if again we are trending on the hourly and the 4 hour, what is going to give us some confirmation? Let's say we inverse a 15-minute gap. Okay, that is pretty that's pretty confirmed that we're going to start shifting and changing structure and direction. Inversing a 5-minute gap or 15-minute gap is pretty crazy, right? So for us to inverse that, the higher time frame is probably going to follow. That's just pretty easy. That's as close as you're going to be able to scale down and get it accurate to when we're going to see a shift, right? So you're going to identify. You guys are, I know, bro, I just typed this and it made me think about you guys that correct me, so I'm going to do it the right way. You are going to identify market structure shift on the 15-minute time frame, because that is the lowest we are able to scale down so that we can get and confirm our entry. Perfect. So you're going to identify market structure shift on the 15-minute time frame, because that is the lowest you're going to be able to scale down so that we can get and confirm our entry. Right, because if you guys think about how big a 15-minute gap is, if you guys look at the 15-minute gap that we had this morning off of market open, we came into it, we tapped down on NASDAQ, sorry, this is on NASDAQ, on an ES completely ran through it. We came up into it, we tapped it, and then we reacted down, right? For us to have inversed that gap, we must have really wanted to go in a direction. If you guys look at today, once we inverse that gap, where were we going? All-time highs. It's pretty simple. All of this is going to be able to tell you where market wants to go. Right, so the last thing that I want to add before I end this video is you should have an easily visible and identifiable market. Right, so what that means is, if you guys are, again, like if we're trying to enter on the 1 minute, you guys should be able to see, okay, we're trending a direction, right? It should look something like this. Right? It should look something like, okay, it's pretty obvious where we want to go. We're displacing, boom, obvious, right? It should look something like that. We shouldn't be just horsing around on the market, chopping around, making shapes with the candles. We should have some sort of direction. All right, so the last thing I want to add to this is that you should be able to see the lower time frame direction. Just because the high time frame is king doesn't mean that the lower time frame doesn't have to be aligned. Make sure that the and LTF are aligned before taking a trade, right? So you should be able to see the low time frame direction. Just because a high time frame is king does not mean that the low time frame does not have to be aligned. Make sure that the high time frame and the low time frame are aligned before taking a trade, right? Again, if you guys are really, really bullish overall on the high time frame, on the 1 hour and the 4 hour, and the 1 minute is super bearish, you know, what do you think that means? You can't take a short just because the 1 minute is bearish, because overall the high time frame is bullish. If you're gonna take a short on a bullish market on the 1 minute, you're gonna have to be the luckiest man alive to predict a complete reversal without getting stopped out. All right, I think this video is very, very clear. I think it's very, very good. I need you guys to let me know if you guys have any questions or have any feedback about any of this. Am I okay? About any of this, let me know in the comments down below or in the Discord if you guys need any help, and I will be here to help you guys. But other than that, that's what I gotta do.